Hi there. Today I'm going to explain the basic rule of double entry in accounting. There are five type of key accounting elements in accounting. First one, assets. Assets are the resources in the business. So later we see some example. The next one is capital or equity. Capital or equity is basically the fund employed in the business by the business owners. The next one is liability. The liability is the external borrowing by the owner of the business. And then we have income. Income is basically the revenue or the money generated by sales or providing the services in the business. And then we have expenses. Expenses are basically the amounts or the bills we need to pay in order to run the business, in order to generate the income. So I will repeat again. There are five types of key accounting elements. First one is assets, capital or equity, liability, income, and expenses. Here are some of the example of each accounting element. Under the asset, we have cash, bank account, trading stock, buildings, vehicles, machines, etc. Under the equity, we have share capital, reserves, retained earning, and the owner's funding. Liabilities, as I explained earlier, they are external borrowings, bank loan, lease, any accounts payable, tax payable, and any accrued expenses. Income, basically the main income include sales income, revenue, interest income, dividend income, higher income, construction income, so we can list it down. Finally, the expenses, as example, rental expenses, salary and wages, interest payment, tax payment, cost of sales, advertisement, royalty payment, forex expenses, admin expenses, advertisement. So there are a whole lot of payment we call as expenses. Now let me explain the double entry rule. So the double entry rule is very simple. We need to see the double effect. So the double effect we call increase or decrease, and then we have basically a two set of rules. If the asset or expenses increases, we have the double entry rule. It says debit. And if the asset and expenses decreases, the double entry rule says credit. On the other hand, equity, income, or liability. If the equity or income or liability increases, the double entry rule says credit. And if the equity, income, or liability decreases, the double entry rule says debit. So if you understand this simple rule, that's a whole idea behind how this double entry work. So once again I will explain. Both asset and expenses increases, we call it debit. Capital, equity, liability increases, we call it credit. So that means the opposite here is credit and the opposite here is debit. So that's basically the double entry principle. So here some example we are going to discuss. So here's example, buying a computer from a store by paying cash of $1,000. So here computer is an asset and cash also asset. So the computer asset is increasing and we are paying $1,000, so the cash is decreasing. Then we'll come to the double entry rules. If the asset or expenses increase debit, so that means here the computer increases, so we call it computer account is debit. And the opposite is credit, so the cash is reducing, so the asset is reducing, so the cash account credit. Let's see the second example. Service provided to a customer and the customer paid $400 by cash. So when we say service, that's an income, and when we say cash, that also that's an asset. So the income is increasing, asset is increasing. So we go back to the rule. The rule says if income or equity or liability increase is credit. So that means we put service income and then we say it's credit. And the rule here it says if the asset increases debit, so the cash increases, so cash account is debit. Let's see the third example. Office rent paid by the bank transfer of $1,200. So here we are paying office rent, so that is expenses is increasing. And then it's paid by the bank transfer, so that means our bank balance is reducing. So that means the expenses is increasing, so that is debit, so we say rent expenses is debit. And bank, so the bank is asset, when it's reduced it's credit, so bank account is credit. So that's how the double entry rule and the double entry principle work. So if you understand the simple rule of asset or expenses increases debit, income, equity or liability increases credit, and the opposite will be credit or debit. So this is the simple idea how this double entry principle works. Thank you.